Welcome, listeners, to today's deep dive into the sizzling world of artificial intelligence, AI, and its seismic impact on the stock market. AI stocks have been on an absolute tear this year, with some names skyrocketing by triple-digit percentages in mere days. At a recent investor conference in Las Vegas, the buzz was palpable. AI is not just a trend, it's a transformative force reshaping entire industries. Today, we're unpacking 5 key profit-driving forces behind the AI boom, spotlighting specific stocks poised for explosive growth, and providing actionable insights for your investment strategy. Let's dive in. The AI Bazooka, infrastructure and data centers. First up, let's talk about what's being called the Bazooka of AI investment. Tech giants like Amazon, Microsoft, Alphabet, Meta, and Oracle are pouring billions, think $500 billion in capital expenditure over the next 12 months, potentially climbing to $1 trillion by 2028, into building AI data centers. This is the backbone of the AI revolution, creating a blast radius of opportunity for companies supplying components and infrastructure. Historically, infrastructure booms like the internet build-out in the late 90s have minted fortunes for early investors in picks and shovels plays. Globally, this trend is accelerating as countries race to establish AI dominance, with significant implications for tech and construction sectors. One standout in this space is Nebius Group, ticker NBIS, dubbed the Ferrari of AI cloud compute. Unlike multi-purpose data centers built by giants like Amazon, Nebius focuses exclusively on AI-specific infrastructure. Despite a massive run-up, revenues surged 500% year-over-year last quarter. It remains a small player with immense growth potential in a market still facing supply shortages. This is a classic high-growth, high-risk play, but the runway looks long. The energy crunch, powering the AI grid. The second profit driver is a direct byproduct of the first, the massive energy crunch. AI data centers are power hogs, straining already burdened grids. Bank of America estimates a 36 gigawatt shortage in the US by 2028, creating a goldmine for energy innovators. Think back to the energy crises of the 1970s. Shortages drove innovation and outsized returns for those who solved the problem. Today, the stakes are global, with energy security becoming a geopolitical flashpoint as AI adoption surges. Enter Oklo, ticker OKLO, a nanoreactor company betting on nuclear energy as the clean, efficient solution for AI data centers. Unlike traditional reactors that take a decade to build, Oklo's smaller designs can be operational in 12 to 24 months. With ground already broken on their first Idaho project and U.S. Energy Secretary support for operational reactors by mid-2026, Oklo could be a lottery ticket. It's a speculative bet, but if they fill the energy gap, the upside could be staggering, potentially transforming them into the energy backbone of AI. Resources, the raw materials race. Third, we have the resource play, where strategic investments are heating up. The White House has signaled intent to secure a domestic AI supply chain, investing in companies like MP Materials, Intel, Trilogy Metals, and Lithium Americas. Why? AI chips, devices, and data centers rely heavily on raw materials, many of which are currently sourced from China, a risky dependency in the global AI race. This echoes the resource nationalism of the early 20th century, when control over oil or steel defined economic power. Today, rare earths and metals are the new battleground. A name to watch here is USA Rare Earths. With China controlling 90% of the rare earth market, the U.S. needs multiple players beyond MP Materials. USA Rare Earths, with domestic projects focused on magnet production for AI and robotics, could be next in line for government backing. Stocks in the sector have seen 200% jumps in days, so timing is everything. Application layer, making AI useful. Fourth, we move to the application layer, where AI becomes tangible through software and services that boost productivity. From automating taxes to revolutionizing healthcare, this is where value is created for end users. Historically, application-driven tech waves like the app economy, post-iPhone, have been massive wealth creators. Globally, this layer drives AI adoption across sectors with profound economic impacts. Tempest AI, ticker TEMP, is a leader here, focusing on personalized healthcare solutions with partners like Mayo Clinic. Despite recent volatility, technical indicators suggest a breakout above $100 could propel it towards $200 to $300. With regulatory red tape easing under current policies, Tempest could ride the wave of healthcare transformation, a sector ripe for AI disruption. Physical AI, the embodiment wave. Finally, we have physical AI, the embodiment of intelligence in self-driving cars, humanoid robots, and warehouse automation. This is the iPhone moment for AI, where it moves from abstract to tangible, much like the internet's explosion after smartphones. Globally, China leads in humanoid robotics, creating urgency for US players to catch up. Tesla remains a top pick with its Optimus robot project. Despite EV headwinds, optimism around Optimus, backed by Elon Musk's vision, Nvidia's chip support, and potential White House alignment, suggests significant upside. Physical AI could redefine labor markets and industrial sectors, with Tesla at the forefront. Conclusion: investment implications and near-term catalysts. So what does this mean for investors? The AI boom offers a spectrum of opportunities, from infrastructure to energy, resources, applications, and embodiment. Each carries risks, high valuations, regulatory hurdles, or execution challenges, but the potential rewards are generational. Historically, tech revolutions reward those who bet early on paradigm shifts, as seen with the dot-com era or mobile computing. For practical advice, diversify across these AI subsectors to balance risk. Allocate to high-growth names like Nebius and Oklo for aggressive upside, while anchoring with established players like Tesla. Keep cash reserves for volatility. AI stocks can swing wildly. Near-term catalysts include government contracts for resource and energy plays. Watch USA Rare Earths and Oklo by mid-2026. Earnings reports for application leaders like Tempest AI. And product launches for physical AI. Tesla's Optimus updates. Policy-wise, continued deregulation and domestic investment signals could turbocharge these sectors. Listeners, the AI wave is just getting started. Stay informed, position strategically, and let's ride this transformative tide together. Until next time, happy investing.